So let me start asking our guests here, how do you view Greece and the Greek banking sector from abroad? Can you give us what you think? How do you view Greece from abroad in general and the Greek banking sector in particular? John, you want to start?
Sure. Thank you. It's a great pleasure to be among you this morning. I would like to start with a thought. A few years ago, I read a book. It's called Pain, the Gift That Nobody Wants. And I would like to distinguish between symptoms and causes. Several times we have a headache, and we think the problem is the headache. No, we need to thank God for the headache and the fever, because it points to a problem. So the way that we as a Blackstone Financial Group view the situation is that several times, not just in Greece, but generally speaking, we are trying to treat the symptoms rather than the causes. We are trying to take care of the fever rather than the underlying cause, which might be cancer or something much more serious. So we see, for example, that yields or spreads are exploding. And we think that's the problem. No, that's the symptom of another cause. And I think that we can move from the mini to micro to a macro picture. The mini picture could be Greece. So the symptom could be the higher and the rising yields or spreads. The underlying cause might be the lost competitiveness or the fact that Greece may be living beyond its means. Now let's move, that's the mini picture. Let me move very briefly to the micro picture. The symptom might be the declining euro. The underlying cause could be the schizophrenia because the fiscal policies in Europe are not coordinated with monetary policies. That might be the cause. And now let's move to the macro picture. The US. We have overextended credit. We have over-collateralized worthless paper. And we believe what we own as a piece of paper is an asset. But that particular asset is somebody else's liability. So at some point, this asset has a face value of $100 million, but it's not even worth a penny. So when we have over-collateralized worthless assets, eventually we have overextended credit, and the banking system is collapsing. Not just in Greece, but through the overextension of credit, we have huge problems throughout the globe.
Okay, Ariam, you want to add something? You want to tell us how Wells Fargo looks at Greece?
Sure. Well, I think John's spot on his assessment of the situation in Greece. Obviously, we take a very cautious, and I emphasize cautiously optimistic view on the prevailing country risk conditions here in Greece. We're concerned about the potential for sustained macroeconomic improvement, particularly on the growth front, given that competitive pressures are very much evident. This is a fiscal situation which is, we're just now beginning to see how the government handles the implementation of this fiscal restructuring and structural adjustment process. This is in the very, very early stages, so we're very much concerned about how sustainable this process is and whether this will continue in the coming years. Politically is certainly our biggest risk concern, as I mentioned earlier this morning. There are inherent weakness in the governance structures here in Greece. Institutions are weak as well. And in the banking sector, that's probably the area where we see the less concern. Obviously, it's an area that's been hit and will continue to feel the downside pressures of the crisis. But I think in the end, it probably has the capacity to withstand the overall environment a lot better than the macroeconomic picture and the political climate.
So I guess you're more optimistic than John.
Slightly more optimistic, I would say.
What about you,
We're very concerned.
So you're closer to Greece than the guys from the US?
Well, we think that the problems for Greece go back actually to the pre-Euro period. So it could actually be a two-decade issue. And the imbalances have been building up through that period. And I suppose the problem has been compounded by the euro membership and the lack of release on the currency side that's possible. But also there's this context of secular deleverage. So for Greece, you have the problem that first of all, it's trapped inside the single currency. But secondly, there is a secular deleverage going on. And around the world, everyone is trying to reduce debt, but it's not the same in any one country. The US has a problem of indebtedness at the government and household level, not so much the financial sector now as it was, and not so much the corporate sector. A country like Spain has a lot of debt in the non-financial sector, and the government is actually less indebted. Greece has a problem on the government side and now to some extent in the financial sector. So this is a really difficult problem, and anyone who thinks that it's going to be solved in the next year or two is dreaming. The reality is most of the world is suffering from a secular deleverage. We might be 3 to 4 years in, and it could be 4 to 5 years more before we come out. And there is this hope that there will be growth on the other side, but there's no guarantee that there will be. So the reality is the problems for Greece are considerable, and it's going to be a major challenge.
Well, let me ask you the million-dollar question. Will Greece default?
The short answer is no, but I think that we need to think a lot about the vested interest here. Because for there to be a restructuring, which I think is more likely, it needs to be a friendly restructuring, and the various parties involved need to get something out of it. And the parties are at least 3 levels. There's the Greek government, the Greek people. So Greece has to get something out of this. There are the bondholders, which are split into 2 groups. There are the official ones, so the ECB we know holds some bonds, and then there's the Eurogroup and IMF that has been refinancing and have created this super senior layer of debt. And then there are the normal bondholders. Right? So to me, there needs to be a friendly restructuring, and I think it could be offered to Greece at some point in the next couple of years as a reward for fulfilling the conditions of the external help. But I don't think there's going to be a hard, unfriendly default anytime soon. I think Greece will, of course, stay inside the single currency. It's in Greece's best interest to stay in this group. And at some stage, there'll be a friendly restructuring, but a hard, unfriendly default, no.
When you are saying friendly restructuring, do you mean the restructuring of the debt of the loans Greece got from the IMF and the Eurozone countries, or you include the private bondholders, funds and so on, because as you know...
Yes. I think we have to qualify it. You're quite right. Regarding the support of the Eurogroup and IMF, I can only imagine that it will be extended beyond 2012, and that's a precedent that's been set by other such support systems for other countries. But I think that at the moment there's no prospect of that money being haircut. I think the IMF will have a lot to say about that. Maybe the Eurogroup countries would consider it, but I think it's most unlikely that support will be haircut at any point. The restructuring I'm really referring to is the public debt that's outstanding and is held in the ECB and in the banking system and by investors.
I see. So if I understand, you say that you believe that the current economic policy program will be extended beyond 2013, right?
Yeah.
Okay. What about you, John? I know you're a bit pessimistic on bonds in general, not just Greece.
Yeah, and I think that we need to view the issue not just the tip of the iceberg. We believe that Greece is just the tip of the iceberg. We have created an unsustainable situation on planet Earth. And what I mean by unsustainable is that we have accumulated too many liabilities. And nowadays, the banking sector, in its asset side of the balance sheet, considers an asset just a piece of paper. But this is not a real asset. Why? Because it's somebody else's liability. So we believe in tangible hard assets that are no one else's liability. So let me give you the situation in the US. The US is anticipated by the year 2017, 90% of the taxes that they will be collecting will be going to pay interest and healthcare benefits, which means that nothing is left to take care of primary government expenses. So the debt that the US has circulated is unsustainable. If the debt that the US has circulated is unsustainable, much more the Greek debt is unsustainable. So from that perspective, thank God for pain. Some kind of restructuring is necessary in order to put things in perspective. Because if we keep accumulating debt without growth, and here is the problem, there is no prospect for growth. Growth in the US is below normal, growth in Europe is below normal, and Greece is not anticipated to have growth much sooner than 2014. So without growth, without eventually waking up sleeping assets, assets that exist but we have not taken advantage of, then the situation is unsustainable, not just for Greece, but globally. And let me close with just with one example. We need to understand what capital is. If we think of a lake on the top of a mountain, somebody might say, I'm going to fish. Somebody's going to say, I'm going to take a walk. Somebody's going to say, I'm going to swim. A true capital perspective will say, I'm going to build a hydroelectric power station up here and make money. And that would be a sleeping asset. We have the asset, let's build something out of this. So unless we awake those sleeping assets, the bond market is a big bubble. What I know is that it's going to burst. What I don't know is when it's going to happen. But when it happens, it's going to be the mother of all crises.
Well, what about you, Ariam?
Well, I certainly do not believe a hard default is imminent or a haircut at this point. I think politically, vis-a-vis the EU, it's just unacceptable. They've invested a considerable amount of money, and I just don't see that scenario playing out. In terms of a restructuring, certainly the prospects are very much at play. And if Greece were to muddle through this adjustment period, I think the markets would be considerably more comforted by a restructuring at that point. So it still is a possibility, and at this point, everything's on the table.
However, I think we have to clarify that an official restructuring, let's say with the IMF or the EU and so on, is not a credit event, right, Stephen, for CDSs and so on.
Yeah.
So it is not really what most people have in mind, because by extending the average, life of the loans and so on, you don't really upset, the balance, or you don't really create.
But to be fair, it wouldn't be a credit event for the public debt either, if it was made a voluntary restructuring. So if we were in such a position as we are at the moment with the long bonds, and I preface this with the point that most of the curve is inverted, so the short-dated bonds in price terms are priced way above the long-dated ones. So it's impossible to apply the same rule across the curve. But if the whole curve was priced at the same level, just imagine, for example, it was at 60 or 70, then maybe there's a point where you could meet in the middle, whereby the bondholders are incentivized to enter into a restructuring that involved an extension, and the Greek government and the people get something out of it as well. That's the kind of thing I'm talking about. But walking away from the debt and becoming a pariah in international markets is not really something that the Greek government should choose to do.
Shall we pay too much attention to the spreads and the yields on Greek paper when we all know that the trading volumes are so thin?
Yeah. No, I take that point. The market doesn't trade. It doesn't trade for Irish and Portuguese debt either, by the way. These markets are broken. Once the yields get above 5 and 6%, they go into almost a high yield category. And the fact that the yield is 9, 10 or 11% is irrelevant. It's irrelevant to Greece because Greece refinances at 5-ish, around 5%. And until Greece comes back to the public markets, the secondary market yield is irrelevant to the Greek government. It's relevant to the investor because the investor is obviously sitting on a mark-to-market loss.
The Greek government wants to get back to the markets in 2011, to return to the markets in 2011. Do you think this is feasible?
Well, clearly, with the current secondary market yields, it's not going to happen. But we can never say never because things can change very quickly. And if Greece has spent, let's say by the end of 2011, Greece would have been in austerity for 1.5 years, under official austerity, but in fact unofficially 2 years. And if it could be shown that the data was in line with plan and all the conditions were being met, the market might well reward Greece with the opportunity to come back. So I would say never say never. It could be possible at the end of 2011, but practically speaking, the yields need to be much closer to 5% than they are at the moment. So if yields were, say, around 6-ish at the short end, I know it's more expensive than the IMF Eurogroup money, but there's no conditionality attached. So maybe that would be the right time to consider coming back.
What about you, John? What do you think? Do you think Greece can return to the markets, issue bonds, that is, in 2011, at some point at the end of 2011?
I would give it a very low probability, probably less than 30%.
Why is that?
Because I think that if we look at the numbers betray a picture of lack of growth, of a very unstable Greek debt market, of a very unstable Greek corporate market, and at the same time, the markets, at least for the short term, the yield on a 2-year bond is much higher, the inverted yield curve that you mentioned, than the 10-year bond. So in the short term, the picture is much bleaker and much darker than it is for the medium or long term. So to try to go into the international markets in 2011 is premature. Things need to calm down. Assuming
Greece attains the fiscal goal, reducing the budget deficit to 7.8% of GDP now, and making more progress in 2011. I think Stephen said that if that's the case, then he can see the case where at the end of 2011, Greece can return to the markets and borrow, perhaps in the short end, right, 2-3 years.
I think it's possible, but it's probably a higher than 20% chance. I'd put it nearer to 50% chance. It's still not a fantastic probability, but I'd say higher than John.
So, okay. The next question I wanted to ask you is about the famous credit. I'm sorry, Ariam, you may wanted to add something to this probability thing.
No, probabilities are low. That's all I can say. I really, the fundamental drivers for Greek return to the markets are just not there at this point, and probably won't be for a couple of years, I sense. This is still a very dire predicament the Greeks find themselves in. And top of that, the global context is not supportive either, so that we have to take that into consideration.
Let me say something here before I go to the credit rating agencies. I think you were of the opinion, Stephen, that Greece may have to try and issue retail bonds and sell them to perhaps some wealthy Greeks or to the Greek public or something. Do you want to?
It's something I wrote about last year, and it's a possibility, but in reality, the amount of money that's going to be raised doesn't actually solve any problems. But it's part of maybe getting back to the markets. Maybe a retail offering is the first step, and maybe tracking down rich individuals abroad is one of the ways of doing it. But it's not going to raise more than $1 billion or so, is it? I think that would be a success actually to raise any money at all. But it's not going to be the solution to the problem, but it could be one step. And I think that the move back into issuing publicly is going to be a difficult one, and maybe there are some small steps that could be taken along the way. At the moment, as we know, Greece can still issue T-bills, and that's offering an opportunity to global investors, right? A very attractive yield level, but maybe something for individuals as well, maybe a short-dated product.
Well, what about the role of the credit rating agencies in this whole episode of the Greek crisis, and not just the Greek crisis? I know you're a bit critical about them. Would you like to elaborate on that?
Well, yes, the ratings agencies have not had a good crisis, particularly as regards sovereigns. As regards corporates, there's nothing really wrong, okay? This is what they're good at doing, and they should probably stick to doing it. There are two kinds of sovereigns in the world. There are true sovereigns and others which have given up sovereignty. So the true sovereigns, like the US, Japan, UK, Australia, Canada, Sweden, these countries have fiat currencies. They can issue freely, they can create money, they can devalue their currencies, they have more policy levers and switches to push and pull. These have no credit risk, zero credit risk. So what the role of the agencies are, I just don't know. They have inflation risk, interest rate risk, currency risk, but there is zero credit risk. The other sovereigns, or the other type of non-true sovereigns, are credit markets. And in many ways, Greece has shifted from being a rates market into the credit sphere. And once we go into the credit markets, we're looking at ability and willingness to pay. We're looking at a much more holistic approach to the total balance sheet, so the total debt. And we can't just look at narrow sovereign debt numbers. We can't just look at the outstanding debt and budget deficit. We have to go to a much broader set of metrics, including the financial sector, the household, and the corporate sector. And I think that's where the industry has been guilty of falling asleep, and the ratings agencies are there to put up a red flag when something needs to be looked at, and we all know that they didn't do that. So yes, I am critical of them, and maybe the solution is to set up some kind of European agency.